Ladies and gentlemen, we have a lot of news to share with you. In fact, some of this is just outright shocking because the amount of bearish investors have not been this high since 2020, and markets are nearly at a new all-time high. And in fact, we are getting some tariff headlines coming out right now, and I would caution you in taking a bearish stance on that, because it's really getting rid of a lot of the uncertainty that we have been faced with in markets in recent weeks. And from a technical perspective, I mean, you're kind of at the breakout level. If we can manage to push higher into tomorrow's trading day, you could have a very favorable, rally on our hands. And honestly, I would not bet against this chart right now. It looks pretty good. So here in this video, I will share all of that information with you, as well as the PPI report that came out today that really sent markets higher. And it has to do with what Jerome Powell said yesterday. Trump says he will consider value-added tax systems as a tariff, warns against routing goods through third countries to avoid tariffs, says non-monetary tariff provisions like vehicle testing will be implemented. Trump says that this new tariff will be over and above steel tariffs, also cars and pharmaceuticals. Trump says that India has more tariffs than nearly any other country. Trump was asked if consumers can expect higher prices and says not necessarily. Trump says that he expects jobs to go up and price could go up somewhat short term. Trump goes on to say that interest rates are going to be going down. Really, this is 10-year treasury yields we're talking about here, and 10-year treasury yields have been high recently because of irresponsible government spending, deficits. That's what has really been negatively affecting your treasury yields. And Trump saying, hey, with tariffs or with Doge, both of these factors are going to help bring down long duration bond yields, which would be a positive for the economy. A U.S. judge extends the pause on Trump's administration plan to put USAID workers on leave until February 21st. It's not clear how long the Trump administration is going to continue to abide by these U.S. judges, because technically, according to the AOC, it's Trump's decision if he complies with what the courts are saying. Trump says that EU has a 20% VAT tax. Also have other measures that hurt U.S. companies, including Apple. Trump says that airlines are asking him to help with EU fees. And Canada has been tough on military. They are not paying enough. He says also that Canada doesn't have enough military protection. I don't know if that's a jab saying we could take Canada if we wanted to. Not exactly sure how to interpret that. But markets are moving higher on these statements that are coming out, and it really just has to do with alleviating uncertainty, okay? As long as tariffs being announced is not some kind of huge disaster, it's all about relieving uncertainty. Now, there's a psychological aspect to your brain that, it's very human in nature. We hate uncertainty in every single thing that we encounter, whether it is someone saying, this is one of my personal, I hate this, when someone says, I'll call you back, and it's something important, but they don't say when or why. They just say, I'll call you back, and then hang up the phone. Okay, now you don't know when you're going to get a call back. I hate that. Okay, but you can see this in every aspect of your life. And companies like Uber Labs, literally Uber created a entity to study psychological behaviors to better, serve Uber customers. And they found a lot of interesting, topics on this where, people can handle bad news pretty good. If you say it's going to be an hour to get your pizza, people don't really care about that as long as they know where it's at, the process, and how far along it's coming. That is why Domino's, they're now famous Pizza Tracker, tells you exactly what step of the process your pizza is in. So if there's a long wait, you're not uncertain. Same with Uber and basically everything else that you encounter. Okay, they tell you where you're at in the process, where your driver's at, expected time that it's going to be there. Even if it's bad, right? It's going to take a long time. That's not nearly as bad. Example that I think some of you guys can obviously relate to. At the airport, if your flight just all of a sudden says delayed, I mean, that's going to piss you off more than it says delayed for 1 hour because of weather. Okay. Now you have a guideline to kind of go off of. Okay. And well, that's kind of the same logic with markets. Like uncertainty of what could be announced and good and bad that could come from that is a lot for markets to process. And I think that is really what is, weighed markets down in recent weeks. And again, I think that is why investors are so bearish right now. I don't think they're actually bearish on, necessarily the Fed, the economy, earnings season, AI, or any of that. I think they're just kind of bearish and fed up with all of the uncertainty. And now that maybe some of the uncertainty will be relieved for a little while, I think that could be a huge turning point for markets, albeit considering we've had earnings season, a majority of earnings season, and things have come out pretty good. Like it's not a disaster for earnings season. And again, now that we're breaking above what looks like this technical downtrend here, from a technical perspective, we could run a lot further from here. I mean, this could be the start of another leg up for markets. Trump says that the EU doesn't treat the US right on trade. You have had the EU come out and already say last week that they were going to lower tariffs on cars. And I think that's why Trump's kind of not including that in this tariff announcement today, because you've already seen the EU give, to some degree, a concession towards US car makers. He expects a lot of countries' tariffs to stay the same, which I don't know if that means not gonna be getting tariffed, those countries are not gonna tariff us back, or if, a lot of countries are just not gonna get new tariffs. And again, I think the real concern would be Mexico, Canada, and China. And it doesn't look like these tariffs are necessarily focused on those areas. So I think that in and of itself is as well good news today. Trump says that he does not expect any exemptions or waivers. He says the war in Ukraine has to end and Ukraine would have a seat at the peace negotiations tables. But really the big news today was PPI. I think PPI really got investors excited. Nick Timmerhouse on X says because the PPI components that feed into the PCE index, financial and healthcare services, were soft in January, the core PCE index is estimated to print well below the big 0.45% increase in the CPI. A 0.27% increase in core PCE for January would drop the year-over-year rate to 2.6% from 2.8%. And as you can see here, Nick Timmerhouse also points out what Jerome Powell said from yesterday's House hearing. From Moiser that says the CPI this morning came in a little hotter than expected at 3%. Did this surprise you? Powell said, quote, the CPI reading was above almost every forecast, but I would just offer a note of caution on this. 2 notes of caution. One is we don't get excited about 1 or 2 good readings, and we don't get excited about 1 or 2 bad readings. The second thing, though, is we target PCE inflation because we think it's simply a better measure of inflation. And so you need to know the translation from CPI to PCE, and we get more data on that tomorrow. Tomorrow we'll get the producer price index, so I think it's always wise. And the people who follow us closely know this, that will know exactly what the PCE readings are late tomorrow. So this is part of why markets did well yesterday also, and why markets really shrugged off the much hotter than expected CPI, because Powell said, it really doesn't matter. We care about PCE. Also big news today. Trump says tariffs, these reciprocal tariffs we've been waiting on, will have a delay and may start on April 1st, which is coincidentally my birthday. And we are expecting to hear more about what these reciprocal tariffs could look like in the next few short moments or so. Really, any time we could be getting more details. And I expect we'll probably get more details on these tariffs, over the coming days and weeks. They will be modified. But let me tell you right now, Wall Street just doesn't like uncertainty. Okay? We can handle bad news. We can't handle uncertainty. Actually, let me just tell you guys like a fun fact. Uber Labs, have you ever heard about them? Uber Labs was the part of Uber that did a lot of psychological research on how humans work and how to better their business. And what Uber Labs found is that people do not like uncertainty. That's why taxis, have failed relative to Uber, because Uber tells you exactly how long it's going to take for your taxi, and what process you are at. That is why companies, like when you're at the airport, it doesn't just say, well, people don't like when it just says delayed, because you don't know how long. Like if it said delayed 2 hours, you'd be okay with that versus it saying delayed for 20 minutes, right? Your brain isn't able to kind of process that uncertainty. And that's why markets hate uncertainty so much. So in fact, if we get bad news, well, that's fine, right? To a certain extent, as long as it's not detrimental to the economy. I think it's really the uncertainty recently that has held back markets. So like literally from a psychological aspect, in every part of our lives, we don't like uncertainty, even if it's bad news, right? That we're getting. We would rather just have the bad news instead of the uncertainty. I would just caution retail investors from taking a bearish stance on these tariffs. Obviously, it depends what is announced and if that can be important to the economy or not, or be really negative to the economy. But just having certainty, or a little bit more certainty, and getting it over with in and of itself is naturally a positive. Okay, so if the tariffs are not that impactful to the economy, then markets are going to take that news very well, even if it reads as kind of a scary headline. I can also report to you guys that investors are scared, essentially shitless right now. Okay, the last time investors were this fearful goes back to March of 2000, April 2013, August of 2020, and now today, in which all of those instances, besides 2000, led to, big rallies, especially, 2013. It was a great time to be buying when people were this bearish. 2020 in August was a great time to be buying when people were this bearish. Again, you went up a little bit after March 29th, but yeah, that was not a great time to be buying. You can see today via the new AI investor sentiment survey, bearish investors hit a new 1-year bearish high. And again, you have not been this bearish in years, okay? At 47.3% of investors feeling bearish. That is crazy, okay? Just crazy. Neutral investors at 24.3%. And bullish investors at 28.4%. So almost half of investors expect the stock market to be lower 6 months from now. I mean, I don't know what's a better contrarian indicator to say we're probably going higher from here. Also being reported late last night that 75,000 federal workers have accepted President Trump's buyout offer. I think a question here is, how does this affect the labor market? And Trump said as well yesterday that he wants the Department of Education to be closed immediately. So we will see what happens with that one. Also being reported that a Trump memo on reciprocal tariffs to mention Brazil ethanol tariffs. So, I don't think this is going to be really too impactful to China, Mexico, Canada, the areas that we do the most trade with. But there will be likely some large implications for Europe, which I think is really what we want to be watching. Now, we do have some earnings that will be coming out momentarily as well, with Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Win, and Republic Services. And you can also see in the news today that Ukraine and the US and Russia are apparently starting to hold some kind of peace negotiations to end the war in Ukraine. And that is, obviously a positive for markets. The percent of stocks trading above their 50-day moving average moving up about 2.88% today to 48.1%, which is a good sign, but you still have 50%, 52% of our markets, or stocks, I should say, on our markets that are below their 50-day moving average. And I mean, you're at a multi-year high for bearish sentiment. So markets are very bearish, even though we're near all-time highs, which is something you don't see all the time. Now, the fear and greed index over on CNN is at 44, which is back into fear territory. And we really haven't left fear territory for the most part of the last couple of weeks. Market momentum is fear, stock price strength is fear, stock price breadth is fear, put and call options neutral, market volatility is neutral, safe haven demand in fear, and junk bond demand in greed. Now, coming tomorrow, we are going to have retail sales month over month. The consensus is negative 0.1%, and I think that's kind of appropriate. I do think there is a chance that we come in substantially lower than that, which would obviously help bring down 10-year treasury yields. It would kind of relax some fears investors have that the economy is getting close to, overheating with the recent rise in inflation. I think, a weaker retail sales number would likely be seen as a positive for markets, generally speaking. And the reason I think January's retail sales could come in really low is that's kind of what we've heard from companies, okay? Like Crocs this morning. They had good earnings, but they actually lowered guidance for Q1, okay? Citing some of the weakness in January. Elf did the same thing. Okay, now Crocs, in all fairness, was higher today because they raised full year guidance for profitability. And that's what investors were kind of looking forward to. And the stock had fallen a lot. We will also get export prices month over month and import prices month over month, industrial production month over month, manufacturing production, and business inventories month over month. All of this will give us a new update for the GDP tracker from the Atlanta Fed, which we are currently forecasting about 2.9% GDP. So depending on how that estimate comes out tomorrow, that could also be a catalyst to move markets. Overall, I'm pretty optimistic with the way that, where we sit with markets, just given how bearish everyone is. That's usually a pretty surefire indicator that markets are going higher. Typically, when everyone is this bearish and markets are near all-time highs, you continue to kind of keep the bull market going. After all, they say bull markets are born on pessimism. They mature on skepticism, and they die on maturity, or they die on euphoria. So I would say we're still in the pessimistic stage. You could say we're in the skeptical stage, but seems like we're still in the pessimistic stage, which would mean that we probably have a lot further to go in this bull market. So let me know what you guys think about this information down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.